This is for the introduction of the stock summary page. You can easily come to any stock summary page just by searching in the search box and select summary. So you will come to a stock summary page. At the very top, in the middle, we give you an overview of the stocks. We call it a GF score. It's measured from 5 aspects of the company and the stock performance. It includes the financial strength, the growth, the profitability, the valuation, and the momentum. And we give it a score. It's for instance, this Apple stock is 98 out of 100. So it has been doing extremely good and has very high GF score. And we have found that the higher the GF score is, over time, the performance is better for the stocks. If we scroll the page lower, we come to different sections of the 5 aspects. For instance, the financial strength. And you can go details, cash to debt, the interest coverage, Petrosky F score versus industry versus history. And it all has detailed information. Again, here, profitability rank measures the margins, the returns of the company, and the profitability of the company over the past 10 years. Then we have the growth, the revenue growth, the EBITDA growth, earning per share growth, free cash flow growth versus industry versus history. And also here, the valuation rank, how the company stock currently valuation is doing. And combined with valuation, we have this GF valuation. We think that GF valuation is a relatively easy way to measure and a more accurate way to measure the company's stock valuation. Of course, you want to dig deeper into the valuation. We have a valuation box. Valuations are calculated in different ways. The GF valuation is actually a combination of all this, and we select it for the company stock. And then we have the liquidity ratio, the dividend information. And here, the charts shows you the brief history of the companies. The revenue and net income's history over the past 10 years. Of course, you want to look at the past 10 quarters, just click on that and it will be switched quarterly. And annual, the cash to debt is the financial strength information, actually balance sheet information. The return information, ROIC and WACC, the relative change over time. And also the cash flow here, extremely important cash flow here. The operating cash flow, the free cash flow, the cash flow from dividends, and then etc. And here is the shares outstanding. The shares, you can see that in Apple's case, the blue bar is declining. It means that Apple has been buying back shares. And this green bar is the percentage of the shares they buy every year. And then, of course, you have the total shareholders' equity and total assets. And in Apple's case, shareholders' equity, you can see it's kind of declining. I think it's because the company spent lots of money buying back shares and paying dividends. That caused that. And here you can see the operating data, the product units sold for Apple. And then we have the analyst and estimates. We have the warning signs. Warning signs is that it's like we go through a checklist for the stock and for the company's financial performance to warn you there might be something wrong. And it doesn't mean that you cannot invest in it if there's a warning sign, but it means that it's something that you need to pay attention to. You need to be aware of. And then we have the analyst estimates here. If we go further down here, it shows what gurus are doing with the stock. In the case of Apple, there are more selling than buying. What are insiders doing with the stock? In this case, it's actually just insider sales. There's no insider buying. Here's the details of gurus are doing. And this part is a Peter Lynch chart. We all know Peter Lynch. He was one of the best fund managers. And here it shows that if Peter Lynch is looking at Apple, and in his principle, he said that when the price line, this blue line, price line is higher than the earnings line. And it's not a very good time to buy. And when the price line is lower than the earnings line, it's usually a good time to buy. Here, if you look at the red dot lines, and which is the earnings line, and the price line is currently higher than the earnings line. So according to Peter Lynch's principle, it would not be a very good time to buy. Here it shows the performance of stock over time. You can compare with other stocks here. And see it's 3 years, 5 years, Y2D, year to date, compare with other stocks. And of course, you can add more stocks to it. And here I want to compare Apple with AMD, for example, to see how the stock has been doing. And I don't like the ones I'm showing here, just remove it and just have AMD here. And Apple is the blue line, AMD is the green line. See, Apple has been doing much better this year than AMD. And if we look at 5 years, AMD has been doing much better in the case. And you can also add economic data here to compare with Apple stock's performance. And in this case, I think we don't include dividend here, but you can easily include dividend here. Just switch the dividend tab on. You can see that Apple went up slightly. AMD didn't change because Apple pays dividend, AMD does not. It also shows the historical performance of stocks. And here are the news, headlines, and press releases, what's going on with the company. And so that we can keep you updated about the company, about the stocks. Yeah, that's overview of the summary page. If you're interested more and you want to dig into deeper information, you can check out our 30-year financial page, which shows a complete history of the company's financial performance. It's fully customizable also. You can also look at the interactive chart page. So, and you can also look at the complete stock report page and dividends, lots of others. But my focus is here, the summary page. And you're welcome to watch my other videos. Thank you.